Craig Johnson. He is Piper Sandler's chief market technician. There was a lot of people, Craig, back in April saying that we were doomed, sell everything, a lot of panic out there. You and your team and a few other people stayed calm and carried on. What did you see that maybe others missed, and what do you see now?
Thanks, Brian, for having me back on Power Lunch. What we saw then is we saw an environment where a lot of our technical indicators were very washed out. They were at levels that you rarely ever see. Percentage of stocks below simple 40-week moving averages, Brian, that were approaching single-digit readings, which we've only seen a few times if you go back over the last 20 to 30 years. We're also hearing a lot of just negative sentiment everywhere. But when these indicators, Brian, get this low, this is where you always want to be stepping up, being the contrarian, and leaning into this market. And that's what we saw then. And what we're seeing now, Brian, is we're still seeing a lot of negativity out there. In fact, on my way back to do this interview, I walked past our bond desk, and they're like, oh, this market's way too expensive. We got to be selling things here. We got to be taking money off the table. So throw that in the bucket of a new contrarian indicator, Brian, for me.
Your bond market. Well, listen, let's be fair. And probably if they're not watching, tell them they should watch right now. Bond people are built to be nervous. That's kind of their role. That's why I love them. That's why though they're in bonds, because they're nervous every day. That's kind of the thing. But your point, I think and I'm being funny, but your broader point is well taken. That sometimes you really got to hold your nose and close your eyes, because I could easily make an argument for this market falling 20%, but the buyers they're not on strike.
Absolutely. And when they start getting more bullish, Brian, that we got to pay attention to that too.
Yeah. So let's talk about what we see now. We know what happened. Markets have come up. Yeah, maybe your bond guys are ultimately going to be correct. But what about, let's say, the Russell 2000? This week, what caught my eye, Craig, was that the small cap stocks had a really nice rip for much of this week. And that is something we have not seen in a long time.
Right. And last time I was on the show, we talked about potentially getting a new high by today. We fell short on that objective. But I would say, Brian, is that it's just getting pushed out. You know, we saw those June CPI numbers be a little bit weak. And then this time around, the July numbers were a little bit better. And that sort of sparked the small cap stocks again. I still think that we're going to get to a new high. I suspect it probably happens somewhere in the fourth quarter, maybe even somewhere in November to December timeframe specifically. But I think you're still going to get a new high there. And that's going to be, I think, constructive as this market continues to keep broadening out in here.
If you hadn't said anything, Craig, I would have forgotten that you actually called today.
To be honest.
August 15th would have been the new high. I give you a lot of credit because you called yourself out on the date. Not a lot of people are willing to make that kind of call, much less a date. So you still see small caps making a new high. Maybe you got the date a little bit off in a matter of a year. We'll give you a pass on that one, Craig. But you still like the small caps overall.
Absolutely. And as we look down cap at so many companies, whether it's in the industrial space, whether it's in financials, whether it's in tech, we're just seeing a lot of constructive big bases that are forming down there. And again, that's a constructive sign for a broadening breadth in the market. And it's a constructive sign that there's just more upside yet to come as we think with this market. And then, Brian, in terms of the broader S&P 500, we've had a year-end objective of 6,600.
Yep.
We're about 2% away from getting to that objective. Call that a pit stop, not a destination, I think, for this bull market.